Well, good afternoon, ladies and gentlemen, and welcome to the second annual Seraphim Capital Markets Day. I'm Rob Desborough, General Partner at Seraphim and your host for the day. Many of you are familiar with Seraphim already. Today, though, we want to bring to life where the business of space is now and look to the future through those who can best evidence the remarkable activity that is happening, our portfolio companies and their pioneering entrepreneurs. Space is tomorrow's world, a multi-billion-dollar opportunity, but is also addressing today's biggest challenges. Space is building new technologies and innovations that will change our futures forever. Today, though, there's no market that space isn't impacting as our portfolio companies address climate change, global security, food security, and sustainability. The business of space is no longer in the future, it's arrived. And on that note, I'm delighted to welcome up our CEO at Seraphim, Mark Boggett. Mark, over to you.
Thank you. So good afternoon, everyone, and thank you very much for coming along this afternoon to our Capital Markets Day. So it's going to be a really interesting afternoon. We've got 70% of our top 10 portfolio companies here who are going to tell you about their journey, the problems they've faced during the course of this year, the things that have gone well, and provide us with a pathway to where they believe the future lies. So really looking forward to what we've got to hear from them today. So I've got a few slides by way of introduction, and I thought I'd start off with really just talking about some of the impactful things that have happened in the space market during the course of the last year. So to pick out a few, so the James Webb Telescope has started operations. So and it's also identified potential signs of life in other galaxies. So really excited about where that might go. The Chinese have launched their own platform in space, their own space station. So just as the West are looking to retire theirs, the Chinese have actually put up their new space station. What else has been going on? The rules around regulation have changed in the market in a really positive way for many of our portfolio companies. This is focused around debris management. Previously, you were allowed in the US to allow 25 years before you had to retire a satellite and draw it from space. That's now been reduced to 5 years, which opens up the market for opportunity for companies that are providing services within space. So we've seen some major M&A this year, so the likes of Viasat and Inmarsat coming together. We've seen some negatives during the course of the year, the likes of Virgin Galactic failing. Virgin Orbit, I beg your pardon. Thank you, James, for the correction there. We've seen big moves in the telco industry with Apple bringing access to satellite to all of their mobile phones. We see that is a real interesting path for the future. So a huge amount of activities that have been going on in the space market during the course of the last year. So what I wanted to do here was really just to give you an understanding of how the investment market has been developing during the course of the year, and looking at that against the more general venture market. So what we've got here is drawn from the Seraphim Space Index. This is a publication that we put out there every quarter since 2017. And this is indexed to the 1st of January 2018. The blue lines are the space investment into the space market. The solid line is the actual investment. The dotted line is the volume of deals. And then we've got that compared against the global VC indices. So you can see here that in terms of investment, that there's been a sharp spike since Q1 2020, where the investment coming into the space market has really outperformed the general market. But as the macroeconomic environment and the cloud started to come, that there's been a decline in the global investment rate of the space market. The thing that I wanted to really draw to your attention on this particular slide was the divergence in the volume of transactions that has been undertaken in the space market. The blue dotted line versus the yellow dotted line. You can see that since the start of 2021, that there's been continual growth in the investment that's been going into the space market in terms of the volume of deals. where you've seen a gradual decline over the last 5 quarters in the space sector. So why is this actually happening? Well, it's because there's a range of activities going on in the market that are really not connected to the macroeconomic environment. So the biggest thing that's going on is around geopolitics and the fact that with the Ukraine and now with Israel, that defence budgets around the world have doubled or tripled to all-time highs. Now, because of this, other investors have become increasingly interested in the space market that's predominantly invested in defence for initial customers. So we've seen that the private equity players come into the market, the likes of Advent, who've acquired Maxar, the likes of KKR, who've been investing into a German manufacturing company, OHB, a minority stake paying a premium. We've seen our own portfolio companies with the likes of BlackRock investing into them. So these major private equity firms are now focusing on the space market. They could be investing into any sector at a discount, but many of these investors are coming in and investing now at premiums, and these investors typically take a 5-year view. So this is a huge market opportunity as we see other private equity firms coming into this market. There's also the sovereign wealth funds that are now really focused on the space market for much the same reason. They're looking to focus on the defence market in order to build their own capability, their domestic capability. So through their sovereign wealth funds during the course of the last 12 months, we've seen these teams focusing on space. We're now seeing them starting to invest into the market. And they're coming into the market not only investing, but they're also being a customer for these space companies. And then thirdly, the climate and sustainability market. There's trillions of dollars of capital in climate and impact funds. And these funds are now increasingly seeing opportunity within the space market. And it's very rare nowadays that we're actually seeing investments where there isn't a climate or a impact-related fund as part of the rounds that we're closing on. So here's some statistics that have just come out of a snapshot of our full year results that were released yesterday. So over the past year, we've seen strong performance from the underlying portfolio. However, the fair value has only increased by 1 million during the course of the year to 187 million. So why is that? Well, it's largely down to our listed portfolio companies, the likes of Spire, AST and Arcit, which have seen significant falls in their share price during the course of the year. This is largely as a consequence of structured investment rounds that they've undertaken in recent times that have really adversely impacted their share price. However, the private companies, where the top 10 companies account for 86% of NAV, these companies are up by 19% during the course of the year. And as I've mentioned, 7 of those 10 companies are represented in the room today, and you're going to be hearing directly from them. So we've seen a robust performance from these top 10, with a NAV-weighted average revenue increase of 34% during the course of the year, but also nearly a 200% increase in bookings. So these bookings are future contracted revenues where the companies have been selling their products or services in multi-year packages. So this demonstrates that there's a real build-up within their businesses. So we've also seen a strong year of fundraising. The portfolio raised $360 million collectively, and this resulted in the portfolio being very well capitalized. So across the entire portfolio, the average is 20 months of cash runway. So my final slide looks at the funding environment. So again, this is drawn from our index that we publish every quarter. So these figures are to the 30th of September 2023, and it looks back over 4 years, the year for each of those 4 years to the 30th of September, and it's broken it down by the various different stages that break down the market. And you can see that seed stage has really been very robust throughout this entire period, with records set year after year. The same is true of Series A. It's modified slightly, which is really only a feature that has changed during the course of the last quarter. And this we put down to the conversion ratios, the number of companies that go through from seed to Series A. You can see that Series B, in terms of volume, has been robust, and Series C during the course of the last quarter has seen a considerable uplift. So 39% increase in the last quarter alone in Series C. Series D is relatively flat, but what we've witnessed during the course of the last quarter is we've seen a return to mega-sized deals. So there were 3 transactions in the last quarter alone that were over $200,000. And this is $200 million. This is a feature that we haven't seen for several quarters. And we now see that investor appetite is now back for the later rounds. So as I described earlier, we see that there is an improving environment for growth investors' appetite into this market, largely driven by the opportunity that's presented by both defence and the intelligence market and the climate and sustainability market. So I'm going to pause there, and I'm going to hand over to Rob next. But I encourage you during the course of the day to ask questions, share your own thoughts freely, and join in and play your part in the presentation today. So thank you.